Hello, welcome to the European Open briefing for Friday, May the 12th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So it's a rather slow start to the day on Friday, and it looks like it's going to be a quiet day to the week as well. We're seeing the dollar fall back against the yen for a second day, and that's on the back of that political uncertainty after President Trump dismissed the FBI director. Although there is underlying support for the dollar as we're seeing expectations rise that the Fed will raise rates in June for a second time this year. The euro and the pound are struggling against the dollar though, because that it follows dovish comments by ECB officials in recent days and Bank of England's policy meeting yesterday, where the bank's outlook wasn't quite as hawkish as many analysts were expecting. And the New Zealand dollar continues to struggle today. It's stuck near 11-month lows after the Reserve Bank of New Zealand maintained its neutral stance yesterday, defying market expectations that they would become a bit more hawkish. So let's start now with the dollar. Here we can see that dollar yen has been drifting downwards since Wednesday. It's currently trading around 113.70, and gold on the other hand has been rising, and the reason for why gold is going up is because of that risk aversion that we're seeing because of the political uncertainty in the US due to Trump's handling by sacking the FBI director. His criticism of James Comey, the director that was sacked, has been rebuffed by US senators as well as the new acting FBI director. So that's raising some concerns about the Trump administration and potentially its impact on its ability to carry out reforms such as tax cuts and so on, and that's helped gold to rise towards $1,228 an ounce. We also had further dampening of sentiment we had several US department stores yesterday reporting weak earnings growth, and that's raised doubts about the strength of consumer spending in the United States, and it puts in focus the official retail sales data out later today for the US, as well as we've got the latest inflation data also coming up. But in the meantime, the dollar is up on the week with gains of nearly 1% against the yen. We had very strong jobless claims data out yesterday, which fell further last week, beating expectations that they would rise. Producer prices also rose sharply in April. They came in above the top estimates. So all of that reinforces the view that the Fed will likely raise rates again in June. Let's move on to the euro now. We can see the euro has been fairly steady. It fell sharply at the start of the week as the effects of Macron's win of the French presidential election wore off. But there's been little support from comments from ECB officials as they continue to signal that the ECB will maintain its ultra-loose monetary policy. Draghi, of course, spoke on Wednesday where he said that underlying inflation is still not strong enough, and yesterday we had the ECB Vice President speaking as well. He said loose for long is less risky than a premature withdrawal of stimulus, suggesting that the bank isn't ready yet to signal scaling back its stimulus program. And the euro is on track to end the week 1.2% lower against the dollar. It's currently trading at 1.0865. And the pound, it's sort of a similar story regarding central bank outlook. The Bank of England held its latest monetary policy yesterday. Some market participants were expecting that there would be more than one dissent within the MPC, but that didn't materialize. There was only one dissent, Christine Forbes. She voted to raise rates, while the other members voted to hold rates unchanged at 0.25%. And although the Bank of England did signal that it may raise rates sooner than what is currently being priced in by the markets, rates. The bank did warn of a challenge. Mark Carney, the governor, in his press conference, he warned of a challenging time ahead for British consumers this year due to the effect of the squeeze in real incomes from weak wage growth and rising inflation. And we saw that dip in the pound yesterday, falling below the 1.29 level. It's currently trading at 1.2872. We also had disappointing industrial and manufacturing data, as well as bigger than expected trade deficit for the UK in March, all of which are weighing on sterling. And looking at the Aussie and the Kiwi, the Aussie has managed to edge up further for a third day this morning, although it's rather limited gains given the fact that we had recent disappointing data out of Australia, and iron ore continues to come under pressure. That's all of that is weighing on the Aussie, although for now it's not doing too badly at 0.7385. The New Zealand dollar, though, we saw that big slump yesterday after the RBNZ maintain its neutral outlook, and we had some rather surprising comments by the governor, Graham Wheeler. He said that the bank doesn't share the market's view that inflationary pressures are building up in New Zealand, suggesting that rates will probably start to go up much later than the expected date of early 29, as currently being forecast which is currently being priced in by the markets. And although the Kiwi has at least stabilized, it's currently trading around 0.6840. Looking at today's economic calendar, we did have German GDP data, the flash estimates, which came in at 0.6% for the first quarter, although that's a rather strong figure for Germany, although it had limited impact on the euro. We're also going to have Eurozone industrial production numbers coming up shortly, and in the US session, the focus will be on inflation and retail sales figures, as well as the University of Michigan preliminary consumer confidence index. And also worth mentioning that we've got another G7 meeting of finance ministers taking place this weekend in Italy, where again we might hear more about the US's trade protectionism stance, as well as some concerns about the US's view on climate change. That's it from me. Thank you very much for watching, and have a great day.